All right, let's talk about the next company, Best Buy. And I don't go in this company a lot, but I always like it when I go in there. I feel like I'm kind of techie, even though I'm not.
Well, I think we'll be going there pretty soon. We need a couple new computers
Yeah,
for
I
the
know
office.
it. I
So.
know it. I love computer updates. Let's talk about Best Buy. They're in the specialty retail. I'm surprised on this. A short on the float is 8.8%, and we get kind of nervous at 10. We do see that the PE ratio it's high. It's 21 versus 23 for the industry. Price of sales, zero point 0.4 versus zero point 0.7. That's good. Price to book value, 5.9 versus 3.6. Price to cash flow, 7.9 versus 9.1. And then PEG ratio does look good, 1.2. Nothing for the industry. Now, their earnings, unfortunately, over the last year are down 29.2%. Industry was up 7.7, and that could be from accounting. That's why you got to look at the financial statements to really understand what these are telling you here. Sales were down 2.6%. That's better than the industry because the industry was down 10%. And the 5-year earnings per share growth estimate from the analysts, they're looking for 9.1% for Best Buy, but a decline of 3.2% for the industry. Oh, they pay a nice dividend, 5% dividend. They do have to use 92% of the earnings to pay that out, only 60% of the free cash flow to pay that out, so that's not too bad. We do see on the balance sheet, current ratio 1 versus 1.6. That's okay. Debt to equity a little bit high, 1.5 versus 1.4. We do see a net profit margin of 2.1 versus 3.4. I'm kind of surprised that's so low, but return on equity is very good, 32% versus 20.1. And they do have free cash flow of 12 or $1.2 billion a year versus 1.3 for the industry. So things are kind of mixed here. What do you got, Chase?
Yeah, so I'm going to give the current price here for Best Buy. It's $76.17. It struggled so far this year. It's actually down about 11%, considering a lot of other stocks, and the stock market as a whole is up about 10%.
Yeah.
Over the last 1 year, down about 23%. 5 years also struggled, down 27%. But they were doing really well in the run-up to COVID. Their 10-year returns 102%. Again, even though they're down about 27% in the last 5 years. Looking at recent earnings report, this is kind of what prompted us to look at it. They fell about 6% after they stuck with annual sales and profit forecasts, even though their quarterly results topped estimates. So people get worried about that because it's like, well, you beat in the quarter, but you didn't lift the rest of the year. So now you're expecting maybe a slower back half of the year. Big reason for that appears to be tariffs. And I think that's having a pretty large weight potentially on Best Buy and the business that they operate. Going forward, though, for Best Buy, looks like they do report on a fiscal basis. So we are going to go out to January 2027. See estimated earnings per share here of $6.69. Gives you a target sale of $111.05. I mean, trades at a forward PE of about 11.5 times. I mean, it's a good, attractive value. Got a nice dividend. I kind of like it. And I have mixed feelings many times with like big box retail stores. But I think with technology, I'm not very techie. You're not very techie. I don't know what the heck is going on with a lot of this stuff. I don't feel comfortable buying technology on Amazon many times because I'm like, I don't know what a gigabyte is. I don't know what the speed processor is. So I think having that Geek Squad there, that separates them from even your Walmarts and Targets. And I think it really kind of is a competitive advantage potentially and could give them a lasting impact.
And I did buy, I think, 9 months ago from them a theater setup. And I went there because they have people that help you. They have their Geek Squad, I think it's called. They came out, set everything up. I have not moved anything. It's like, hit this button, it'll work. So that's what I do. But they came out and they showed me that. And then if you had questions, give them a call. So that's very, very positive. And that's why I like they help people that are less geeky or less tech savvy than they are. And I did notice, it's surprising, 90 days ago, the earnings per share was $6.70. It's only $6.69. So no concern from the analysts about the tariffs. So I've always kind of liked this company, and I've watched it for years. It seems to go up 30, 40%, then drop, up 30, 40%. It seems to be when it hits these buy levels, it's a good buy.
Yeah, and I saw the CEO on CNBC this past week, and she was talking about,
Oh, it's a she?
Yeah, it's Corey Berry, I think is her name. And I liked what she had to say. She seemed very knowledgeable. Obviously, to be running the company, you got to be. But she was talking about the health tech, so kind of these Oura rings and the Apple Watches. And that's really been, I think, a big area of emphasis for them. And it makes sense. A lot of people are interested in the space. And again, a lot of people don't know much about it. So having an ability to go in there and ask somebody about it's helpful. And they also were saying they're testing different store formats. So like in, like downtown Atlanta, or like I don't know if it was New York City, but that's one that comes to my mind. Like the Miami was the big one. They're testing these smaller formats because you can't buy real estate or rent real estate. I'm thinking of the Best Buy for our San Diegans in Mira Mesa. It's a huge footprint.
Yeah.
You don't want to have that in a downtown area. That's going to be way too costly. So we'll see how that test goes. And then they're also testing other areas. I think they opened a Best Buy in Bozeman, Montana. So
I think I heard that, Bozeman, Montana.
yeah. So, I mean, it sounds like they're expanding. It sounds like maybe there is some room for growth that they do see. I mean, I'm interested. I think this is a very good possibility of a good opportunity here.
And remember that short on the float's about 9%, which is surprising. So the shorts have to cover, like the stock could rebound quickly.
Yeah.
So, but I'm not sure why that's there. So Best Buy, possible buy in Best Buy.
Yeah. I like it.
I kind of like it too. Are we going to add it to the portfolio, think, or we'll talk about that later?
Maybe the watch list. We'll see.
Yeah, we'll see. So